What's up, everybody? Welcome to a new episode. I am sorry I haven't been that active in the past few weeks. Very sorry for that. Was pretty busy, but I want to make it up to you and show you a new company that I fell in love with. It's a Canadian company in the commodity sector, and I want to jump right into it. We are dealing with Royal Helium, and as the name suggests, we are dealing with helium. Usually, I'm not that much into commodities. I don't really follow commodities, although I know that prices have been going up dramatically in the past couple of months, especially lumber, copper, and you don't know. Helium caught my attention because it's kind of, you don't really think about what you can use helium for, right? Except for balloons and blimps. What do I know about helium? Well, I dug into the company because I came across a tiny article some months ago, and I just thought, well, that sounds interesting. So I was trying to figure out who's in the helium sector, which companies am I dealing with, what's the story behind it, and it turned out to be really, really interesting. And I ended up with Royal Helium. There are some companies out there, but I want to focus on those guys because for me, they have a lot of advantages that the others don't. Let's get right into it. Royal Helium, Saskatchewan-based helium exploration company. I want to start with telling you about the company and the industry. So just to figure out how this stuff works. Andrew Davidson is the CEO. He does a lot of interviews. He posts a lot of presentations. He talks to a lot of people. He puts them public over YouTube, on LinkedIn, whatever. You can find a lot of stuff, and they explain very well what they are doing. And it's just interesting to follow them. So, what is helium? Helium is a gas. It's an inert gas, very abundant in the universe, but pretty rare on Earth. You cannot make it. You have to find it. It's non-renewable, basically, and it's formed through the natural decay of uranium and thorium. So this takes a couple of million years until natural processes create helium here on Earth. Or it's a byproduct of natural gas. So once you're drilling for natural gases, you might find helium as a small amount of the gas and you sell it as a byproduct. But recently, since the industry developed in a certain way and the commodity prices got very lucrative, helium became a major drilling target for itself. And you sell the other gases as a byproduct. So tables have turned. And what's interesting about Royal Helium is the amount and the size of the land that they have. There is only one company that has a bigger land package than Royal Helium. They're called North American Helium. You can see them right here. It's the green area, but they are a private company. You cannot invest in them. And so Royal Helium is just second to them in terms of size of the land package, and that's what caught my attention in the first place. Why? Because when you have the rights to explore land, you have the right to explore land and nobody else. At least that's how far as I'm concerned and as it works here in Germany. So they have, and now really think about it, almost 1 million acres of land. 1 million acres, that is just freaking huge. And the helium industry attracts multiple companies right now, very small companies, I have to say. But you want to go with the early mover and the ones with the biggest land packages, because once they have the land, the others don't get it. This is the value chain for a regular gas exploration company. So value chain starts with exploration and drilling, right? That's where we are. On the land, you drill for reserves, drill down, you extract the gas. Second would be refrigeration, liquefaction, then transport, storage, and getting it to the customer. Those are basically the 5 steps for the gas industry, and it doesn't work any different for helium as well. What's interesting is the average cost breakdown. You have 11% of the all-over cost of helium, right? So this sums up to 100% of all costs that are occurring in the gas industry. Exploration and production, 11%. Refrigeration, liquefaction, 42%. Transportation, 20%. Storage, 27%. When you have to take care of a big part of the costs all over the value chain, this means to me that that's where you have a lot of stuff to care about, a lot of stuff going on, suppliers, energy usage, and so on. Probably also the biggest parts of investing in facilities. This to me sounds like that's where you have the most risks. You have to deal the most with purchase prices, selling prices, with suppliers, with buyers. Interesting about Royal Helium is they said for right now, we're going to focus on exploration and production. So just finding the reservoirs, drilling down, extract the gas, selling it on the well, and don't have to worry about any risks with distribution, marketing, rectification, and whatever. Just pass it on to the buyers, which I think is nice when you're a startup, right? You want to start early to generate cash flows, to being able to grow organically and not go from finance round to finance round, dilute the shareholders. So you wanna start getting productive and profitable, and then do the stuff all yourself, financing yourself from your free cash flow. So very interesting. We're gonna stay here and leave the rest to other service providers more downstream. When we talk about exploration, how does it work? This is very interesting. So you have an amount of land that you lease, that you have to pay royalties to use for the exploration rights and so on, but then you need to find out where the reserves are. So this works basically with those huge trucks. They have these massive plates they put on the floor, and then they just start vibrating, and this creates sound waves that go into the ground, that are being reflected by the different layers in the ground. And there's a station wagon with super sensitive microphones that collect the sound waves and figure out the underground structures. And this is pretty high tech. It looks very simple right here, but what you end up with is high level 3D underground images that you use to plan those little black lines, your drilling paths. So this is where the rig overground drills into the earth, into the reservoirs. And this is an actual picture of drilling targets from Royal Helium. So right from that presentation, I will post the link in the description. You can watch it. It's very, very interesting. So once you know where you want to go, you prepare the drilling rig, set it up, and you go from over the ground to underground. I think around about 2,000 or 2,500 meters into the reservoir that you found. It's basically like finding an underground reservoir. We're talking about extracting gas. Just put a straw into the reservoir and gas comes up and leaves at the top. So where does this helium hype actually come from, right? I mean, we talk about balloons, blimps, but that can't be all. So when we look at this chart, we see the actual industries that need a lot of helium. We're talking about semiconductors. We're talking about fiber optics industry. We are talking about MRIs, welding, laboratory uses. We are also talking space exploration and rocket launches. There's a lot of helium being consumed by those industries, and those industries are growing. I mean, just look at NASA and SpaceX. Just look at the electric vehicles. Look at semiconductor industry. Everything is becoming more digital, more computer. There are huge data centers. You have microchips in any device that you use. It's just crazy. And so what do you think those levels of consumption are going? They're just going up, up, up. The biggest producers of helium used to be the USA. They had a very massive helium reservoir. It has been depleted in the past, so everything that's left there won't be sold anymore. They just save it for internal purposes. It's a strategic helium reserve for the USA. The US as a helium producer has declined over the past years. This also attracts new players, new countries in the game. I mean, Russia, Qatar, but also Canada. And Canada has a lot of reserves too, which makes it very attractive. And what's interesting here is just what I said. Just by the consumption and the modern industries, those will raise the demand for helium in the future. And the challenge is to guarantee a safe supply of that really rare gas. And it happened in the past that there were massive shortages of the gas, so prices exploded partially, super extreme high spot prices. And this is something that you can count on for the future. So it will be very, very interesting to keep up with the supply in the future, just to meet the increasing demand from the different countries and the developed industries. Talking about prices, when we look at the officially long-term supplier contract prices, they more than doubled from 2017 to 2018. This is the last auction price when I think the US Strategic Reserve was still offering their helium for sale. Prices in the past went at least up here, $300 to $400, but you have to dig into the spot prices. There's no official price tag from auctions. At least I couldn't find one. Please help me out if you know a source. But prices have been dramatically higher, even reaching up to over $1,000 per MCF, which means 1,000 cubic feet. This is the cash that we can receive from selling helium at the well, as Royal Helium does. So far for the industry, I want to show you their Twitter game. I think if you are interested in the industry and the stock and the company, you should follow them on Twitter. They post a lot of stuff. They keep you in the loop on what's happening. Getting into the stock price, I want to start with where do we come from? Cormark Securities, they work together with Royal Helium, help them raise new capital, financial services company. This is from October 27th. They started covering their stock and they came up with a price target of 80 cents. Since then, press release that Royal Helium has done another financing round, oversubscribed. They raised over 6 million Canadian dollars to just proceed with their exploration. You can find it also here how these financing rounds work out. So basically new shares are issued and sold. Also, not only shares, but also warrants, so that initial investors can buy shares later if they want to for a discount or for whatever they agree on. And so, yes, shareholders get diluted, but also cash is getting into the company and projects are growing. And this is very interesting. I'm going to get to it a little bit later, but this is just how it works out here. And this has been repeated. In April, the price target was raised, as we just saw, from 80 cents to $1.05. This means the company has made progress. They have de-risked, because when you are dealing with exploration, you're always dealing with exploration risk. But this is also where most of the value is created, because once you have de-risk your exploration activities, then the benefit is over proportional to the risk that you took out. And this is what you might want to take into consideration when you're dealing with exploration companies, not only helium, but also mining, gold miners, silver miners, uranium miners, any company that has to dig in the ground. It's always dark right before the pick. But once you found what you were looking for, then the upside is just many times bigger. And this is also why I like the company, because I think that they don't have that big of exploration risk compared to when you start somewhere new, because Saskatchewan and where they have been drilling, this area has been explored by the oil and gas industry and there is infrastructure there. So price target has been raised to 105. Then recently, May 12 press release, they did their drilling tests and gas tests on the well and evaluating flow rates and helium concentration and so on. And what they found out is that they have actually discovered a much bigger helium reserves than what they were initially looking for. And this is, to me, this is big news, because wow, more resources than you were planning with. This is the best news that you can get when you're dealing with exploration companies. And what happened? Price target has been raised to 170. Telling everybody that, hey, our reserves are much bigger than we anticipated. Isn't this just the best? So that leads us to the next financing round of 15 million. So new shares will be issued. Yes, shareholders get diluted. Those new shareholders can also buy warrants. But the thing is, they need that money to develop their drilling sites, to establish the wells, get the infrastructure done so they can start extracting the gas. And this is just something that you have to pay for upfront. You can't start selling gas when you don't have that stuff in place. But when you know you got a big reservoir, it will be economically viable. Then of course you can take that money and invest it and get that infrastructure in place, because then afterwards you are dealing with real cash flows, selling gas to buyers. And so this is not just something that, to me, it always seems like when you invest in a new mining company, which I practically don't, is the biggest risk, because they buy all the equipment and you have to move a lot of land, a lot of rock. You have to just crush huge amounts of rock to find little pieces of gold. To me, this is just a lot less risky. And once you have economic grades of helium that you were looking for, the rest is easy peasy. And so this news is just great, and they should take the money, they should invest, they should prepare the wealth so they can start selling. That's all I'm hoping for. And as an investor, this is the best you can wish when you are invested in exploring companies. So price targets for the stock. This is old news, 80 cents. We talked about it. It has been raised to, what was it, 170 by Cormark. So this is old news. And 8 Capital set the price target to 185. If we look at the chart, this is where the good news happened, where things are getting a lot less riskier. And now we are at a stock price at 68 cents with a price target of 170. I'm not sure if they take account future dilution on that, but it's still higher than 68 cents. And what I was saying is we are just preparing to really create cash. So this is the setup cost, has to be financed with equity. They don't want to take on debt, which I can totally understand. I wouldn't do it myself. But then the CEO said they want to start production at the end of the year. Of course, there may be some delays, and there have been delays in the past, but that's just natural. I mean, you have to dig in the ground, and whatever action you take, you want to make sure that you are precisely right in what you're doing, because when you're wrong, that's a lot of sunk costs, and you don't want to have that, because then you have to take on additional capital. And so you really want to double test, triple test, making another flow test, and this just takes a few weeks. So because I have read people complaining, yeah, you promised this by summer or by spring, now it's almost summer and you don't have results. Well, that happens. You have to go 2,500 meters into the ground. So what are you expecting? It's not like you open a window, look outside and say, oh wow, there's helium, close the window and start production. No, you have to dig, you have to make sure you end up in the right spot. So for what I'm thinking, this company offers a very, very good profile for investing, because we've seen the price targets actually $1 higher than the actual stock price is right now. Bigger reserves than anticipated, and we will start making cash in the near future. I just want to show you this, because this is basically a business life cycle, blueprint of a business life cycle. This is where we are. We have to invest here, cash goes out, need to be refinanced over the stock market via equity. Of course, we don't make any profits because we don't sell anything. We are just digging and drilling and ramping up stuff over ground to just extract helium in the future. But once we enter production, cash comes in, and then profits come in. And then when the business gets really, really valuable, depending on the resources that they are about to find, depending on the grade of helium they extract, and also depending a lot of the helium prices. But I'm very confident, because we have limited supply, increasing demand. That won't change in the near future. We have higher prices than ever on the spot market for helium. And this is real sales, real cash flow that is coming in. We don't have the risks like gold miners, uranium miners that have to extract a lot of rock, crush the rock and extract tiny, tiny, tiny parts from the stuff that you actually want. So you just put the straw into the reservoir, poof, there you go. And I found this Cormark presentation somewhere in the internet. I don't really remember where, but there they actually came up with their net asset value model. So what they were doing, they were discounting those cash flows, those free after-tax cash flows over the next 20 years, starting 2020 up to 2039. And the bigger the reservoir gets and the more wells are on stream, the bigger the cash flows get. The only thing is, as an investor, if I buy the company 100% for 70 million right now, I would go, okay, what's the future cash flows going to look like? Over the next 20 years, if I get back much more cash that I paid for the company, then it's a good investment. And I want to know how big the extra amount of cash will be discounted to the present day today. And depending on how much risk you want to take on, or how much of a price tag you want to put on the risk you're taking in terms of discount rate, then you end up with your price. And honestly, I end up with a price target of much higher than this, also much higher than 170 as by Cormark. I could easily see a price target of at least $2.50 to $3 in the near future. I am very, very positive in general, because one thing you should not forget about the geopolitical factors. You don't want to have Europe too dependent on Russia. You don't want to have anyone too dependent on Qatar, the Middle East, and so on. So this might also be factors that are beneficial to us when you invest in a helium company in Canada, because Canada is pretty liberal, does not have any restrictions as far as I'm concerned. I think it's even more likely that the US gets restriction on their helium production, talking about export rights, talking about import rights. So this might also be some sort of a political commodity. So I feel really good when dealing with Canada. To sum it up, it looks to me like a very good opportunity in the helium sector. I hope this helps you out. I hope you got interested in the sector. If you have any questions, or if you know something that I don't know, feel free to ask questions or put your posts in the comments. Feel free to send me information, ask questions. I'm very happy to discuss. This is not investment advice, although I'm very positive, but I'm not a financial advisor. I think I always have to say it. I don't know. I just want to make sure you do your own homework, share your information, challenge my thoughts, my ideas. Also send me other ideas that I don't know of. I'm always happy to discuss, find out of new opportunities. At the moment, it's very hard to really find good investments, I have to say. I'm doing a lot of screening. I usually only invest when there's profits and cash flow coming into the companies. This is the only company I am investing that does not have cash flow so far. And I was really comparing those different companies, and I ended up with Royal Helium because of those factors that I told you: land package, first mover advantage, production start in the near future. Those are the three factors that totally convinced me. Maybe they convince you, maybe they don't. Feel free to comment below the video. Have a nice weekend, and I promise the next video won't take that long. See you next time.